皆さんこんにちは、矢崎です。今日はですね、アメリカのフロリダ州パームビーチにあるWeiss Ratingsの本社にお伺いして、創業者のマーティン・ワイスさんにお話を伺っていきたいと思います。それではマーティンさん、どうぞよろしくお願いします。
Thank you very much for coming.
それではですね、マーティンさんにちょっといろいろとお話を伺っていきたいんですけども、まず最初にこのWeiss Ratingsというのはどういう組織なのか教えていただけますか？
Originally, Weiss Ratings, it was first and foremost a financial rating agency. I founded the company in 1971 to help empower individuals to make their own investment decisions. So today, we provide a comprehensive evaluation of nearly all U.S. banks and insurance companies, plus over 12,000 stocks listed in North America and nearly 3,000 exchange traded funds or ETFs, not to mention other types of investments, including mutual funds and even crypto assets. And we do this by asking some basic questions. Is it safe enough? How big is the return? And equally important, how steady is the return? And how much growth in the return do we see? Those are the basic questions we ask.
じゃあその具体的にどのようにしてそういう格付けをされてらっしゃるんですか？
Well, let me give you an example that you're probably most interested in right now, and that is our stock ratings. You may be asking yourself, if you're an investor, is it safe to invest in this company's stock? Can I get a good enough return on my investment? Well, it's not easy to answer that question. It's an easy question, but it's a hard answer. It requires processing a vast amount of data, including its balance sheet, its earnings, stock price movements, and comparisons with competitors. A typical investment analyst spends most of his or her day in spreadsheets, analyzing this vast amount of data. Our rating system does all of this through automated algorithms. Gavin Magor, who oversees our rating, says that the rating system replaces most of the tedious and time-consuming tasks that are essential to investing. And that's exactly right. We collect 6,000 different pieces of data on each stock. And the algorithm performs 100,000 calculations before giving one rating, before answering that question, should I invest now? The 6,000 data sets contain all the information needed to make an investment decision, including sales, profits, cash flow, stock price movements, comparisons to market averages and with competitors over the past several years. Now, without Weiss Ratings, you would have to collect all this data yourself and make all sorts of calculations in order to make equally accurate investment decisions. And needless to say, most individual investors would not be able to spend that much time on each individual investment decision. Heck, even professional investment analysts are limited to analyzing just a few dozen companies in their special area of expertise. The Weiss rating system does all that time-consuming work for you. The rating system is monitored by a team of investment analysts, mathematicians, data scientists, and engineers who constantly monitor the ratings to ensure that they are what they consider optimal. And they tweak the algorithms as needed. What's more, now we're adding AI to that process. In fact, we began developing our AI capabilities many years ago, long before most people even knew what it was. But it was tough work. Now, with the advent of new AI technology, we've greatly accelerated our AI development. We're commonly described as an investment rating agency, and that's how we started, as a financial rating agency. But more accurately, we can now consider ourselves a financial technology company, and that's how we've been for the past decade or two. We are a financial technology company because we take full advantage of technology to provide individual investors with tools and information they need to build secure wealth. Now, to digress for a moment, I believe that the investment analysts at Weiss Ratings are very good, and they have a proven track record of their own. I think this is because analysts at other investment firms spend most of their day just collecting data, whereas our analysts let the rating systems do that part of the work, and instead they can devote their time to diving into deeper insights in their special areas of expertise.
なるほど。それは確かに一般のアナリスト、プロのアナリストの方でもそれはできないですね。もう6000種類ものデータを10万回検証されてらっしゃるんですか。なるほど。じゃあそれだけの深い、分析に基づいたものに基づいて、Weiss Ratings のアナリストたちはさらにこう分析を加えるってことをやってるから、他の機関に比べてもっとこうよりワングレード上の情報をお届けすることができていると。しかもそれに最近では AI の技術なんかも導入されて、それを使ってより精度の高い分析をされていらっしゃると、そういうことなんですね。じゃあこの Weiss Ratings のその格付けの実績っていうのは一体どのようなものがあるんでしょうか。
Well, yes, the Wall Street Journal once published a broad survey of the profit performance of the ratings issued by various companies and stock rating companies, various research and stock rating companies, including Goldman Sachs, JP Morgan Chase, Standard & Poor's, and 24 other Wall Street firms that you're probably familiar with were also included in that study. Well, Weiss Ratings was ranked number 1 among all of those companies in the nation in that study. In other words, it was reported to have contributed the most to investor returns. Barron's, a financial media company with over 100 years of history, even introduced us by saying, the Weiss ratings can be valuable to investors seeking stable returns with appropriate risk. That's key. Stable returns with appropriate risk. Esquire magazine said we're the only ones that have no conflict of interest. Remember, conflict of interest is what caused a lot of those troubles in the past. And that helps explain why the New York Times said Weiss was the first to see the dangers and say so unambiguously. It's why Forbes magazine called me Mr. Independence. And it's why the U.S. Government Accountability Office, the GAO, and the New York Times and the Wall Street Journal recognized the great outperformance of our ratings compared to our competitors. You know, independence means unbiased analysis. Unbiased analysis leads to more accuracy. And accuracy is why investors from all walks of life trust what we do.
なるほど。全米で1位ですか。それは素晴らしい。しかも JP モルガンとか、それから、スタンダードプアーズとか、そういった格付け機関を抜いての1位を取ったことがあるということなんですね。しかもバロンズからもそういうその安全性をしっかりこう担保しつつやる投資会社としてはWeiss Ratingsが一番っていうふうに言われたっていうのは、それは素晴らしい実績というか、すごいことですよね。でもそれが今おっしゃられていたその独立して、分析をされているというなんか他の、格付け会社さんが、そのいろんな報酬を受けながらやってるというところを一切受け取らないっていうところでそういった分析ができるということなんですね。じゃあ他にちょっとこうどんな実績があるのかもっともっとちょっと詳しく教えていただけますか。
Well, yes. Let me give you some examples of individual stocks. Weiss Ratings launched its rating system to the public in 2003. And some of the stocks that initial rating system identified as buy are now well known. They're well-known blue chip stocks such as, of course, Apple, Amazon, Nvidia. Most investors back then were either very skeptical or they knew very little about those stocks. But we upgraded each of these stocks and many more to a buy level. The result is that investing in these stocks at that time produced phenomenal returns, approximately 78x for Amazon, 260x for Apple, and 300x for Nvidia. But the biggest winners that our early ratings identified were not Apple or Nvidia. The biggest winner was Monster Beverage, which sells energy drinks. It may be hard to believe, but that company that sells energy drinks generated more returns than Nvidia over the past 20 years. And it's true. If you had invested in Monster Beverage, which was rated a buy soon after we opened our rating system to the public, you could have seen it grow 650 times. We issued a buy rating on a stock that could have made investors millionaires with just one investment. More importantly, our rating system has never downgraded Monster Beverage to a sell in the last 20 years. So if you had followed our ratings, you would have either bought more or held that stock until today. There are many other achievements. For example, during the Lehman Brothers collapse, the S&P 500 fell more than 50% from October 2007 to March of 2009. And then it took 5 years to recover back to its highs. That was the worst time to invest. But Weiss Ratings was extremely selective. So then, if you had invested in stocks rated buy by Weiss Ratings, you could have exceeded the S&P 500 in a majority of the stocks and more than doubled your assets in 10 years, even during that bad period. So using Weiss Ratings, investors were able to find investments that were considered appropriate even during the Lehman shock, one of the biggest crises of this century. Here's a more recent case study. We've been publishing a report called Highest Rated Stocks, which is available for free in Japan. In the US, we charge a fee for this report, but we're making it available free of charge to encourage smart investors in Japan who want to take advantage of Weiss Ratings to build their wealth investing in US stocks. The report, Highest Rated Stocks, is published monthly, and many have outperformed the market by a wide margin. For example, Clearfield, which we highlighted in our August 2021 issue, has seen the stock rise 126% in just 6 months. Supermicrocomputer, recommended in our May 2023 issue, rose 140% in just 6 months. Natural Resources, featured in that same report, rose 50%. Comfort Systems in the July issue and Dorian LPG in the August issue are up 34% and 77%, again in 6 months, respectively. I repeat, this report is available free of charge in Japanese. And if you followed the Weiss Ratings buy and sell signals, you could have done even better than the averages. Now, while we've provided several examples of large returns, the foundation of our rating system is safety. You know, Warren Buffett once said, rule number 1, never lose money. Rule number 2, don't forget rule number 1. Our rating system, likewise, places great importance on safety. In October 2007, at the market's pre-Lehman shock high, I said that stocks rated buy by our rating system were able to generate solid returns. I told you that, right? Well, meanwhile, stocks rated sell or don't buy by our rating system lost more than 80% of their value even after 10 years. The results for our sell stocks were disastrous. The beauty of our system is that it has not only identified stocks that generate large returns, but it has also avoided bad stocks with a significant probability of losing money, even if you hold on to them for 10 years.
なるほど、それは素晴らしいですね。やっぱりこうアップルとか NVIDIA をもうそんな昔の時点で多分誰も本当に注目も何もしてなかったと思うんですけども、その頃に格付けで、買いを推奨しておいて、でなんといってもモンスターベレッジ650倍ですか。それ相当素晴らしい、パフォーマンスだなと思うんですけど、まあそういうそのパフォーマンスの大きさではなく、それよりも一番重視していることが安全性っていうところを大事にされているっていうところが、これも本当投資家にとってはなんていうかこう安心して、ワイスの格付けを使っていけるというその前提にはもう本当その安全性っていうのが素晴らしいと思うので、パフォーマンスの大きさもすごいですけども、安全性の部分 ここを重視されているっていうのは本当に素晴らしいことかなと思うんですけども、なぜこのように優れた結果を出すことができるんですか？
Well, to answer that question, I need to speak from our history, and it's a long story. Because it began long ago, not 53 years ago when I founded Weiss Ratings, but almost 100 years ago when my father began working on Wall Street. Okay, it's a long answer. You ready?
Yes.
Okay. He got his first job as a teenager working for Western Union, the telegram company. His job was processing telegrams from Europe, especially from London, the London market, which was the biggest market in the world at that time. And he was surprised to see a big volume of buy orders for American stocks. He didn't have much experience in the stock market yet, but he saw that some US stocks were very popular and that the money coming from London was a factor. The more stocks went up, the more that European investors bought. And the more that investors bought, the more the stocks went up. And he learned the importance of capital flows. And it made him extremely curious to find out why a few stocks attracted most of the foreign capital, while most stocks did not. Then, in early 1929, Dad got a job as a stockbroker at a boutique brokerage firm, which was owned by a man by the name of Martin Weiss. That's right, his boss's name was the same as my name by coincidence. Now, Dad was born and lived in an immigrant neighborhood of New York City where people worked very hard but earned very little. And he also knew that commodity prices, natural resource prices, were in a depression. And real estate values were crashing in most rural areas. So when the Dow Jones averages kept going up and up in the first 10 months of 1929, my father didn't trust it. He didn't trust the disconnect between the great times on Wall Street and the tough times in the neighborhood where he lived. He didn't have many clients yet. Most of them were just friends and family. But he told them to get out of the stock market. In his office, the veteran stockbrokers laughed at him. Weiss is just a kid, they said. What does he know? And then came Black Monday, October 28, 1929. The market plunged the equivalent of about 4,500 points in the Dow Jones of today. On the next day, it plunged the equivalent of another 4,000 points. It was like an 8,500 point crash in just 48 hours. Suddenly, Irving, my father was a hero. And suddenly the word got around that he was the only one who saw it coming. That's when he decided to do more, much more. He knew accounting, so he collected data on as many companies as he could. And he put the numbers down on large green spreadsheets that bookkeepers used, like Excel is today, but this was on paper. And he actually created formulas that would later become the foundation of my company's own computer models of today. Using his formulas, he identified the companies that he thought were the riskiest, and he called them dogs of the Dow. Plus, he kept a separate list of companies that had the strongest financials and the best value, and he called them diamonds of the Dow. But he noticed that even those companies were overvalued compared to their historical average, so he decided it was too soon to buy. Then something very interesting happened. He met a Japanese exchange student who was getting his master's degree in New York by the name of George Kato. And that was a very rare event because in those days, you could count on your fingers the number of exchange students in the United States. What was even stranger is that Kato had learned how to trade stocks from some of the most famous traders of the day, including Jesse Livermore. So Mr. Kato became my dad's mentor and taught him how to trade, including how to make money in a stock market crash by selling short. After the crash, the stock market rallied sharply until about April of 1930. And that's when the US economy began sinking into a depression, not before the stock market crash of 1929, but after that crash. Now, at that point, most people thought, oh, the bear market is over, everything is fine, but my father thought it was just beginning. So in April, after the big rally, he borrowed $500 from his mother, my grandmother, and he started selling short the dogs of the Dow. When the market plunged, he took profits. When it rallied, he shorted again. And by the time the Dow hit rock bottom in 1932, he had over $100,000, which is more than $2 million in today's money. That was about 200 times his money. Not bad for a young man who was just a rookie on Wall Street, right? It proved the value of his spreadsheet. So he decided to dedicate most of his time to perfecting his formulas. But then the market rallied more sharply than usual, and he lost about half of his profits. So he decided to shift his focus from the dogs of the Dow to the diamonds of the Dow, the ones with the best balance sheets, with the best earnings, with the best valuations. That was 1932. The Dow was near its bottom. It had lost almost 90% of its peak value. So the first thing he noticed was that the diamonds of the Dow were now greatly undervalued. Despite the depression, for example, General Motors had conserved cash and was still profitable. AT&T, my dad said, was not only a safe bet, but also a leader in technology, perhaps like the big tech companies of today. And it was also a great value. So on Friday, March 3rd, 1933, Dad decided to start buying stocks again. Almost all other investors were worried about bank failures because so many banks had failed at that time. And when my dad went to put his orders in at the market was extremely quiet, almost no trading. "Are you crazy?" said the order clerk. "Why are you buying? You're practically the only one." Well, my dad didn't answer the question because he was too busy buying. He bought General Motors and AT&T for pennies, near their lowest price of the 20th century. Now, Dad also used his formulas to identify the best investments in the gold sector. Years later, let me tell you what he wrote. I'm going to read what he wrote. He said, in those days, very few people were buying the gold, which was ironic because you could buy it so easily. All my clients and I had to do was go to our bank, walk up to the teller window, and ask for $20 gold coins. And that's what we did. This was what my father wrote. Meanwhile, on his spreadsheet, besides blue chips like General Motors and AT&T, several large gold mining companies were also greatly undervalued. So he figured he couldn't go wrong if he concentrated on the companies with his highest ranks, like Homestake Mining, Dome Mines Limited, and other gold mining companies. Now, most investors today have no idea how large the profits were in gold shares in the 1930s, right in the middle of the Depression. Homestake rose from $65 a share to $130 a share in 1931. Then it doubled and doubled again to more than $540 a share in 1936. In the meantime, Homestake's dividends also doubled and redoubled, reaching $56 per share in 1935. Think about that. The dividends earned in 1 year alone almost paid back the entire purchase price of the stock. Dome, another great gold producer, did even better. You could have bought Dome for as little as $6 a share and sold it for $61 a share. So a person who put $10,000 into Dome could have walked away with more than $100,000, excluding dividends. My dad's spreadsheets, all updated manually with a sharp pencil, were his stock rating system. Those spreadsheets proved to be very valuable for two reasons. Not only because they gave him objective, quantitative information to guide his investment decisions, but also because they gave him confidence. He had the courage to buy when most investors were selling. And he had the power to sell near the highest prices of that year and then to buy near the lowest prices. Now, I first began working with my father when I was about 11 years old. By that time, he was writing investment reports and selling them to investors for $1. He called them books. But to me, they look more like reports with 40 or 50 pages about the market and about stocks to buy or sell. My job was get the latest stock prices from the newspaper each day and put them into his spreadsheets with a pencil. Later, he taught me how to plot the numbers on a chart. And when I was about 18 years old, starting college, I began to help him write his reports. In 1971, when he was retiring, I decided to start my own company, which is now Weiss Ratings. And the first person who joined me was my father. With great pride, he used to tell family and friends, well, Martin used to work for me, now I work for him. And a few years later, he and I embarked on a major project like none other on Wall Street. We decided to convert his manual rating system into a computerized rating system. We began by converting his formulas into a computer model. Then the next step was to build the computer database. A good friend of my dad's was Arthur Bernhardt, the founder and owner of Value Line. At the time, Value Line was the only successful independent stock rating company in America and probably in the world. So we studied very carefully what Bernhardt did, and we learned some things from him. But it seemed Bernhardt was almost always bullish, and most of his ratings were almost always very positive. Dad was bullish when he thought the market was undervalued or fairly valued, but he turned bearish when he thought it was overvalued, and his ratings reflected that. Now, for many years, we didn't publish our stock ratings. We just used them internally to decide which stocks to recommend for buying or selling in our reports. We didn't start publishing our grades on all stocks, and this was a beta version of our grades, until late 1999. And our main goal was to warn investors of a big crash in IT stocks. Why? Because none of the tech stocks got a Weiss rating of buy. Over 90% were rated sell, and the rest were holds. Meanwhile, major Wall Street firms like Merrill Lynch and Goldman Sachs told their customers that all the popular tech stocks were buy or strong buy. There was such a sharp contrast between our ratings and theirs. That's why we decided to publish the entire list to warn investors of an impending crash. And sure enough, between 2000 and 2003, the NASDAQ index, which is composed mostly of tech stocks, fell by 75%. It was almost as bad as the great stock market decline of the early 1930s in the early years of the Great Depression. And like my father experienced in 1932, after that crash, it was always also the best time to buy. So in 2003 is when we launched, as I said before, the kind of ratings we have today. And that's an even more accurate version of our original rating system. And it's, like I said, it's the one that continues to be used today with some tweaks, but fundamentally the same rating system as we began in 2003. Now, some of the first stocks we upgraded to a buy were among the big winners that we mentioned earlier, but there were hundreds of other stocks that we also rated a buy, which have done very well. That's a long story, but you get the idea.
いやいや、本当にすごい歴史を感じたなっていうところではあるんですけども、やっぱりこうマーティさんのお父さんの代からそういうフォーミュラっていうのを作ってきてるっていうことで、1930年代の大恐慌っていうことはもう要は100年近く前、90何年以上前っていうような、そのくらいの頃から作り上げてきたものが今のWeiss Ratingsの格付けのベースになってるんだと。でしかもそこで多くの方が今はまだ買いだ上がりだって言ってる時にいや今もう下がるよということを言う、その勇気もその時代から作り上げてきているっていうところがやっぱり今のこの格付けシステムの中に導入されているというか、そういうマインドというかものがあるんだなというのをちょっと今聞いてて思って、だからこそ、今の時代でもリーマンショックの時にも今は多くの人がアナリストがバイと言ってるところでも、いや結構危険だよということが言えたり、保険会社に対してかなり危険だということとか、銀行に対してもそういうふうに 今はこのちょっと預金を守るために引き出さなきゃいけないとか、そういうアドバイスをすることができるっていうのは、もうそういうところから来てるんだなと。長い話でありましたけど、その分その歴史を感じるいい話を聞かせていただけたらなと思っているんですけども、じゃあこのWeiss Ratingsの格付けシステムっていうのは、そのマーティン・ワイスさんのお父さんのアービン・ワイスさんが作られたアルゴリズムに基づいて作られていると、そういうものなんですね。
Exactly. After 1929, my father spent the rest of his life improving his formulas. Then he passed them on to me, and I founded Weiss Ratings. What he had done manually with pencil and paper, we converted into a computer code that crunches a massive database, taking advantage of the rapidly advancing computer technology. And by homing in on an algorithm that had achieved astounding results for nearly 100 years, the company created a system that could use technology to rate almost any investment in real time. That is the Weiss rating system of today. The algorithm evaluates the safety and profitability of investments based exclusively on thorough data, not on uncertainties such as investors' intuition or analyst predictions. And that is why we believe we've been able to achieve the results I just described to you.
なるほど。なるほど。だからこそ、もうWeiss Ratingsは、格付け会社であり、テクノロジー会社でありっていうところにこうつながっていってるわけなんですね。では、私たちがこの日本の投資家の方々ですね、個人投資家の方々がどのようにこのWeiss Ratingsの格付けシステムをですね、活用していけばいいんでしょうか。
Well, there are many ways to do this. One is to go to our website and use our rating system. We have our rating system available for free. And with it, you can get immediate answers to important questions like, what are the most highly rated stocks right now? How are the stocks you already own rated now? And if you find it a little bit difficult because the website is in English, I'm sorry, but you can rely on our Japanese partner. In the Mail magazine operated by our Japanese partner, Gavin, who's in charge of the rating system, writes articles about the rating system and how to use it, which are then translated into Japanese and delivered to you. Please try using them while reviewing our ratings. Other analysts at Weiss Ratings in Japan also write articles, translate them into Japanese, and deliver them to you. So we recommend that you check the Mail magazine delivered by our Japanese partner without fail. Another way to use our ratings is to read Weiss Ratings Monthly and Power Elite Monthly. They're also published by our partners in Japan. And they are not only translated into Japanese, but also published by Japanese investment analysts who provide additional analysis and content to make them more useful for Japanese investors. I'm very confident that these excellent, up-to-date reports will give you an edge in your asset building. And of course, I'm also very confident in the Weiss Ratings system and believe that all investors should take advantage of it. However, I'm not a blind believer that our ratings are perfect. Yeah, we strive for perfection, of course, but this is an imperfect world and we cannot predict the unpredictable. That's why Weiss Ratings has a large team of investment analysts who work with our rating system to develop and deliver better investment strategies to our investors. With Weiss Ratings Monthly, for example, you'll be able to use ratings to your advantage and tailor them to your own investment objectives. You'll also learn about non-equity investment opportunities such as bonds and commodities, which will definitely improve your performance as an investor. Power Elite Monthly combines ratings with other criteria and investment strategies to provide you with analytical information and portfolios of growth stocks suitable for long-term investment. I think it's ideal for those who are looking for longer-term, safer, and even greater asset growth than making investment decisions based on ratings alone.
なるほど。確かにね、Weissの格付け通りに上がっていくものもあれば、やっぱりこう 外的要因に影響して、その不本意にこう下げるっていう、そういう場面もやっぱりあるので、そういうところはやっぱりこう、Weiss Ratingsの格付けだけではなくて、アナリストを含めた情報ですね。我々の日本のアナリストもそうなんですけども、そういうのも含めて、ご覧になっていただく方がよりいいんじゃないかというふうに言っていただけているということですね。はい、ありがとうございます。ではですね、もう本当もうたくさんお話を聞かせていただいたんですけれども、最後に、このメッセージ、この動画をですね、ご覧になっている方々ですね、日本人の投資家の方々が見てるんですけども、その方々に対する何かこうメッセージとかいただけますでしょうか。
Well, thank you very much for coming to Weiss Ratings. I spent 2 years in Japan and did research at a Japanese financial institution, so I'm very pleased to be able to bring information to Japanese investors. At the beginning of this interview, I said that I founded Weiss Ratings to protect and grow your assets safely in good times and in bad times. Protecting and growing assets when markets are good seems easy enough, doesn't it? But the data shows that, on average, individual investors in the US are earning less than 1/3 the return of the S&P 500. Many investors have not even managed to produce returns comparable to the S&P 500 when the market is strong, and have probably lost more than the S&P 500 when the market is bad. Why is this? Well, one of the investment mindsets my father taught me was to avoid emotions like fear and greed. When stock markets are booming, many people get greedy and invest without evaluating the intrinsic value of safety of their investments. So they often do most of their buying near the top of the market. Then when they see negative news or stocks falling, they get scared and unload their stocks when they're cheap, near the bottom of the market. In other words, they buy when prices go up and sell when they go down. This kind of investment strategy will not grow your assets. And this is why you should distance yourself from emotions such as fear and greed. Of course, everyone is human, and no one can eliminate emotions entirely. But I want you to stop before you make an emotional investment decision. Sure, the stock is rising fast right now, but you must ask, is this stock that you're about to buy really worth its price? What are the chances it will rise even further from here? What is the risk that it might fall? And when the stock price falls so far that you feel fear, you can ask a question like this. Has the intrinsic value of this company been undermined? Or is it due just to investor panic and just a temporary cycle? Look at the Weiss ratings. If the rating on a rapidly rising stock is sell, it may mean that despite rising stock prices, its performance and financial condition are poor. Could this rise be a bubble? Well, the question alone should make you stop and reconsider the idea of buying that stock, right? If the stock has risen significantly and the rating is still a buy, then you can invest with greater confidence saying, well, the rise is based on solid performance. It's not a bubble. I said Weiss Ratings is really a financial technology company, not just an investment rating agency or a financial company. And as a financial technology company, Weiss Rating systems allow us to distance ourselves from the emotions of greed and fear and make investment decisions based on data. We believe this will enable us to safely protect and grow our assets in good times and bad. And we apply the same system even when the markets are good. We encourage you to incorporate the practice of checking the Weiss rating before making an investment decision or before adding any new assets to your portfolio. And we recommend that you periodically check the ratings of all assets that are already in your portfolio, such as maybe once a month.
はい、ありがとうございます。本当に。感情に基づかないデータに基づく投資と、これをですね、Weiss Ratings はですね、テクノロジー会社として提供していきますので、ぜひですね、参考になさっていただければというふうに思います。それでは今日は マッチさん、長らくですね、お話を聞かせていただきましてありがとうございます。マッチさん、どうもありがとうございます。
Thank you so much for coming.
Thank you very much.
I'm so glad.
Thank you much.
こんにちは。Weiss Ratings Japan の安井です。動画を最後までご覧くださりありがとうございます。Weiss Ratings Japan では YouTube 上ではなかなかお伝えできない具体的、専門的なコンテンツも多数用意しています。もしあなたが配当投資をしているなら必ず見ておいてほしい動画があります。それがこちら、配当投資の新常識、Weiss Ratings創業者マーティン・ワイス氏による講演動画です。配当投資といえば成長株投資ほどのリターンは狙えないけど安定している、キャッシュがもらえて嬉しい、誰でも簡単にできるローリスクローリターン、そんなイメージがあるかもしれません。ですが実際は違います。配当投資は成長株投資を超えるリターンが狙えるものですし、私たちが株式投資で得るリターンの大半、これは実は大半を配当が生み出しているというデータもあるんです。そして何よりローリスクローリターンではなくハイリスクハイリターンな側面を持つ難しい投資です。おそらくこの動画を見ているあなたは配当金を受け取ったことがあると思います。配当を重視して投資先を選んだこともあるでしょう。ですがこの動画でマーティン氏が教えてくれる数々のデータ、これには驚いてもらえると思います。配当投資家として一歩レベルアップできる内容であること、これは間違いありません。この動画では配当投資の常識を覆す6つのデータ、これをお見せした上で配当投資を選ぶときに見るべき1つの基準、これについて学ぶことができます。この基準を知っているだけで配当投資で起こる最悪のリスク、つまり減配とか無配になるリスクですね、これを大幅に下げ、配当収入と資産を同時に大きく増やすことが狙えるようになる、そんな基準です。講演動画はですね、概要欄の URL から今すぐ無料で見ることができるので、配当投資を実践している方、ぜひ一度ご覧ください。